integrated reporting standard framework today. Now, what is special about that is that now in Nigeria, there are new standards, and it's not just Nigeria, it's across the world, that have been introduced in the International Sustainability Standards Boards. It essentially means that the Western Hemisphere is saying that for them increasingly to invest in Nigeria, companies have to report according to a certain way. And DBN is working towards reporting in that manner. And essentially what it does is it's sustainability reporting. So you must begin to draw a very clear line between your internal activities and the money. And show them and categorize them according to certain metrics. And so we also have started work towards there. So I'll pause here, just looking very quickly across that ESG strategy and mapping it out as we are as a bank. And I will hand over to, I think, my colleague Mary Esther to come and talk a little bit more about the operational bits. Or Mary Esther, do you think we should take questions in the first half, or should we just...
Because I think that maybe some of the questions that may be asked, I may already speak to by the time we speak to how we operationalize. So good afternoon, everybody. It's been a long day, so I will try my hardest not to take a lot of our time. And thankfully, Lolade started with all the big English and grammar. So it's good that we break it down to how we actually, work, what the model for us at DBN is. And I'm saying this because, like she mentioned during the introduction, I'm in the market-facing department of DBN. So I'm the Business Development Relationship Manager, responsible for Deposit Money Bank. So all the commercial banks, Merchant Bank and the likes. Also representative, like she said, is the Microfinance Bank, other financial institutions. So all of those we have worked with, or we've worked with over the years since we started in the past, operations since like 2017. So just to lean on the description she gave on the model or the structure of DBN being a wholesale licensed development finance institution. So wholesale, meaning that we don't retail, and then licensed, meaning that we're regulated by the Central Bank of Nigeria. So we are a bank, a development finance institution, but a development bank. So that being said, what essentially that means, especially in the wholesale leg, is that we partner with, we call them participating financial institutions, PFI for short. So that when I say PFI or something, you know what I'm talking about. So I'm essentially talking about all of these banks that I have described. So we partner with the PFIs to channel funding largely to underserved MSMEs in Nigeria. One of the things that has come out a lot in conversation is the access to finance, and all of that. So that's kind of like where we are looking at. But obviously, we're a development bank, so we're very impact focused. And like you heard Lolade reel out some of the impact areas that we are very interested in. And green is obviously one of them. And it's something that we have started and we're passionately, pursuing. And I'm sure by the time Jeremy comes to talk to us, our head of strategy and policy, he'll be unpacking more one of the recent, achievements that we have made as a bank, as a DFI, and as a country. So I'll just leave that there. So just so that you don't live in a hurry. But what does that mean for people in this sector, in this segment that are MSMEs, that are projects? Because typically when you tell them, oh, banks and all of that, it's like as if you've put a layer, so they're a bit, discouraged or something. But the truth is that if you're in business in this country, you're definitely working with banks. Your money is not under your pillow for the most part. No matter who you are, you find there must be somebody. If it's not microfinance, it's commercial, if it's not there must be somebody that you trust with your money and so it means that if you trust them to keep your money, if you trust them to do your business and all of those things, collect for you and all, then you should be able to develop a relationship. And we have found that those banks have a network. Sterling Bank is one of our partners, which is obviously, this is a different collaboration under Sterling Foundation. But just to say, so we have actually started aggressively in green, and we have done like quite, I mean, well, it's a growing direction. I mean, it's a growing portfolio for us. And in terms of how it works, we expect you to meet with your financial institution, so your PFIs. If you go to the DBN website, we have a list of all the PFIs with the contact persons and their email addresses. And we also have our own general DBN email addresses, so that, you know, if maybe you're trying to have that conversation, or maybe at some branch level, local branch level where you are, you're not able to get that comprehension, or they're not able to fully understand you, you can always, you know, escalate that, and we can channel you appropriately to our contact persons within the bank. But essentially, being licensed and wholesale means that we can't deal directly with the MS. That's the regulatory environment that we are in. So we rely on those our partners to profile them, make them PFIs, give them the funding so that they can on-lend to the MSMEs. And we've been doing that seamlessly year on year. Yes, we don't want to give you so many presentations, but year on year, the numbers have been very good. We've, in terms of the reach, number of MSMEs we have been able to reach, in terms of the size of our portfolio, in terms of even how we have grown, in terms of being a sustainable entity, because no matter what you're doing, even if you're a development bank, you must be sustainable. Otherwise, tomorrow there will be no bank. So yeah, so just to have that. And some of the things that we do, and like I said, green is standing out, but one of the things we do is that we try to create propositions and products around some of these initiatives. So just like I mentioned, like green, we have a green proposition today, which we have kind of gotten the PFIs to key into. And one of the selling points in that proposition is that we try to give something back if those funds are channeled in those areas. So green is one of those such areas. And I'm not to speak too much on this, but based on the feedback that we've gotten from all the players, the stakeholders, the MSMEs, and even the PFIs, we're growing institutions. We've taken some feedback. There's some things we're working on, and we know that by the end of this year, by the time we show some of, in our impact report, some of the milestones we're going to make in that area, it's even going to be more impressive. And some of our partners, who are our foundational partners, have constantly provided us the funding to support that. Recently this year, we signed something with KFW. We signed an agreement with KFW, and that funding particularly is channeled for green. So mind you, I just want to bring some clarity in the room to first of all say that as Development Bank of Nigeria, our aim is to finance sustainable growth. So in essence, what it means is that it's not an intervention fund or an intervention bank. It is something that is supposed to be sustainable, scalable, and that sometime in the future, when our children come, they will see that DBN is still in existence. And you know that interventions, whilst they are good, they are very good, even I like them, but it's not a mainstay. It's something that can happen. Otherwise, it will keep distorting the market. So that's not the goal here. But what we want to do is to provide certain incentives, you know, to certain sectors, green, gender, like Lolade said, youth, startup, people who are accessing credit for the first time, and people that are, you know, in the general gender, more excluded areas and sectors. And that's where we make the difference from being, you know, just a regular bank to being a development finance institution. So I think I'll just pause here. I've actually spoken for longer than I should have, because we want to make sure that you have your time for your questions. So I'll call my colleague, Jeremy, so that he can just take the last part of the conversation. Thank you.
Thank you. Thank you to Lolade and Mary Esther. Since the ladies have led the conversation, yeah. So let's just balance it. Now this is a gender balancing, okay? All right. Thanks, everyone. I think the last point I want to talk about is really on the strategy of the bank with respect to green financing. But before I speak about that for a moment, it would be nice to know how many of us are actually in the green space or have projects. Yes, okay. Want to change it? Oh, in the... Okay, sorry. Yes, how many of us play in the space? The green space, you have green projects. Can I see you? Okay. do we have mics going around? I want to get some view. Yes. So two persons, or maybe three. I can take three. Can you share what are you doing and why are you doing what you're doing? Anybody who wants to share? For those of us who are playing in the green space, what are you doing? Yes, this young man, the lady, the young man, and okay, I have to pick one of you, but let's start with the lady. So let's know what you're doing and why you're doing it.
Okay, good afternoon.
Please check the mic is working. Yeah.
Okay, good afternoon, everyone.
Yes, let's hear you, please.
Okay, can you guys hear me?
Yeah.
Okay, my name is Anu, and I lead the product marketing team at Max.
At
Max.
Max.
Yes.
Okay.
Okay, so Max is not an MSME
Okay.
or a MSME anyways, but we're also impacting MSME. So what we do at Max is that we democratize access to vehicle ownership, but particularly low emission vehicles and electric vehicles. And what we've done over the last 9 years is that we've been able to impact over 7 million medium and small scale enterprise. We've been able to also inculcate gender inclusion into some of the things we do. So today, people think that the mobility and transport space is predominantly for men, but we've created a program called the Female Cohorts in our activities at Max, just so that the underserved population that do not have money to buy a vehicle today. If today I do not have money to buy 2 and 3 wheelers, you come to Max, and what we do is with as low as 4,000 naira, you get a 2-wheel, an Okada, 2 wheels, low emission 2 wheels or electric vehicles, and then you can keep working and you pay a daily remittance for a specific period of time. We are very climate conscious in how that the vehicle types that we deploy are low emission vehicles and electric vehicles very recently. And in the past 3 years, we've deployed over 300 electric vehicles. We've completed over 20,000 deliveries with our electric vehicles in participation with Jumia. And why we are doing what we are doing is because we've seen how the mobility landscape in Africa isn't particularly optimized.
Yeah.
The roads are not very great.
Yeah.
There is no infrastructure per se, especially in terms of deploying electric vehicles. So why I am really here with my colleague, by the way, it's the business development team at Max, is that we're looking to network with partners that are passionate about infrastructure in the electric space.
Okay.
So we have electric vehicles today, the 2 and 3 wheelers. The M3s, for instance, you can charge and swap the batteries if you do not want to charge. But there are no, how many swap stations do we even have in Lagos?
Absolutely, not a lot.
So these are the things that, these are the conversations I think we should start having, because again, it takes a lot of partnerships for us to build a sustainable structure if we are truly going to go electric and reduce our carbon emissions in Africa. So yeah.
Fantastic, thank you very much, wonderful. And the great point you touched on is the fact that it's almost an ecosystem requirement that you need to support that. Who is going to provide the infrastructure, then who's going to provide the vehicles, and who's going to, that's very good. Thank you. Yes, you raised your hand, sir? Yes.
Hi guys, Buki Aguru here. So I'm in the energy space. What we do is gas to power generation, and the impact there is obviously trying to get people into more renewable energy sources. The grid, the purchasing of the grid right now, the price of the grid right now is slightly expensive.
It's not slightly, it's very expensive.
It's very expensive. I say slightly because we're still, on the cheaper end when you
Fair enough. Yes.
put in Africa.
Yes.
Sorry, back to what I was saying. The grid is getting a little bit more competitive. So, and what we're trying to do is obviously gas-powered generation. So we're trying to bring the price of the grid and the price for the gas to merge. And in that case, we're trying to make everybody use a more renewable source of energy to achieve, what they would have ultimately used fossil fuels to achieve. And that's the impact that we're trying to drive.
Fantastic.
Yeah.
Thank you very much. Okay. Yes. I'm going to take a lady. Yeah. So let's take him and then we'll come to you. Sorry, before you go, the young man there, yes. And then Hart.
All right.
Yes.
Good afternoon, everyone. My name is James Olale. I work in 21st Century Technologies Limited, and I lead the digital infrastructure. What we're doing to be sustainable and to our green project, being a data center service provider, we consume a lot of power.
Yeah.
And what we've done is on campus we deployed 1 megawatt of solar. So every day, at least during the day, we take as much as 600 kilowatts to subsidize what we're getting from the grid in terms of energy. And then also we also just set up a 10 megawatt gas turbine plant in our data center in Lekki, and we're also expanding. So we're looking at the gas turbine plant can use both hydrogen gas and CNG. So we are looking at the possibility of generating hydrogen gas in the future. So those are some of the things that we're doing in terms of making the environment more sustainable.
More sustainable.
Yeah.
Thank you very much. Last but not least.
Thank you so much. Good evening, everybody. My name is Dami Adeshola, and I'm here representing Growth Boosters. We are a credit tech. Ooh. Am I safe? We are a credit tech company, and one of our service offerings is actually green financing. So we are currently in our launch phase. We are yet to go to market, but so there are two sides of the coin when it comes to green financing. We have the folks who, for example, you have a school and they're tired of using generators and they want to get some solar panels to sort of move to that energy and efficiency, and we will provide them with that credit to do that. On the other side, you might have a supplier of solar panels who wants to sort of expand their business so that they can, serve the market better. And so what we do essentially is connect the folks who need the financing with the folks who can provide the financing via microcredit. So we are an intermediary organization, essentially just responsible for doing that linkage. So introducing the SMEs, working specifically with small businesses, and introducing them to folks like yourself who have extra savings that you're not using and you don't mind putting some 1 million, 2 million into a business that could help them to grow. So crowdfunding, being that intermediary for crowdfunding.
Thank you very much. Fantastic. I think, and I'm sure if I allow us to keep talking, we would see that a lot of us are doing very great work with respect to driving environmental sustainability and sustainable growth in the country. But you see, the big question, before I talk about why one of the recent achievements we've made is very key and is a game changer for all players and for Nigeria as a whole, one of the things that we also need to double down on is to understand, why are we even doing this? Why are we talking about sustainability? Why must we be worried about low carbon emission? Why are we trying to drive a more sustainable, environmental friendly environment? It goes back to what the issue is today. Now, if the science is to be believed, and I'll just take a few minutes just to do a little bit of education, because it's very important. I know some of us know it. Some of us are still, it became a buzzword. Sustainability, climate change is a buzzword. Everybody's jumping at it. Some people read it and just go out and say climate change. There was the whole buha around COP28 and everybody going in there. So you have that. That's a noise, all right? And but beyond the noise is real value and understanding it. Now, one of the major things that have happened in the world is industrialization, all right? The first world industries, China, US, America, China, America, and the rest of them, Germany and the rest. They industrialized and they became the first world generational economies that we know today. It's because of industrialization. Now, and you hear the question of saying that, we don't contribute so much to the carbon emission, so we are suffering the worst of it. Now, if the science is to be believed, all of the different carbon emission that has happened over the years because of industrialization has affected the earth. And out of the 195 countries in the world, the only agreement that forget about Ukraine, forget about the Russia war and all of the things that have happened and the fact that we fight ourselves. The only thing that most of us agreed to, all countries largely agreed to, was one fact. There is no second Earth. There is no other planet that we can live in. They all agreed to it. And they signed it. And that's what they call the Paris Agreement. So everybody agreed that we must do better, that the Earth is dying. And if the science were to be believed, that if the temperature gets to 2 degrees Celsius, Earth cannot support life. That is the science, right? So what this Paris Agreement is saying that, for all the things we did in burning carbon and making the Earth hotter, then we need to do better. Now the problem we third generations in quote or developing countries have is that now we want to develop, but you're not telling us that we cannot develop the way you developed because you burnt a lot of carbon to develop, right? Now you're saying don't develop, and we're saying, okay, so what are the other ways of development? They say there are alternative ways, but those alternative ways of development is expensive, you know. And if you just look at just getting your generator versus getting a solar, you can know how much it is to, for how many of us have solar in our house? How much did it cost you to do that solar? In the long term, it's cheaper for you, but the initial capital is expensive. So somebody is saying that, how do you want me to transit and industrialize when I don't even have money? I'm suffering. So the world agreed, and this is where it became important. These guys, you know, who've done this, so the greatest emitters of carbon, the US and UN together, they came together and said, okay, you know what, guys, we still want you to industrialize in a different way, but also because you are suffering the effects of climate change, so the harsh weathers and all of the desertifications and the things that are happening to you, the flooding, they're saying you also need to adapt, which means build some level of resilience to stop the impact of climate change for your communities and for your environment. So because we want you to do that, we know you need money. So they came together and they put monies into a fund called the Green Climate Fund. Right? The Green Climate Fund is the largest green fund that exists in the world, that is meant to help developing countries like Nigeria, least developing countries, and what we call the small island state. So those countries that are by the seas, and then when sea rises and there's flooding, all of their entire community goes away. And so that fund is there. They've put a lot of money there, all right, in there to say, come and access it. The beautiful thing about that money is, one, it is a patient capital, right? Because for all the things you're talking about, green financing, you realize that the cost of financing becomes an issue. Especially when you're asking people to go into a space that they're not really familiar with. You need to incentivize them to do it. And the best way to do it is to ensure that the cost of capital first is patient, and then the cost is very affordable. So they have the architecture of this fund is such that it is affordable, it's concessioned, highly concessioned, and is long term. Right? So you have funds that are 20 years, 15 years, 10 years, right? That gives you enough time to invest the capital and see the outcome of it, right? So they've put these monies together, designed it, and they say, all right, countries, come and access it. So the Green Climate Fund is saying, come and access this money. But each country requires, first, when we all signed into the Paris Agreement, which Nigeria is a part of, we committed to saying, I'm signing to this, and I'm committing Nigeria that we're going to reduce our carbon emission by a certain percentage. I think it's called the NDC, Nationally Determined Contribution. So Nigeria today has said we will reduce our carbon emissions by 20% if we use our money, but conditional, you can increase it to 42% or thereabouts if we are supported by funding, external funding. So that's our promise. So the Green Climate Fund says any country who wants to access this money must ensure that they are aligned to what they have promised in terms of reducing their carbon emission. Today, since the Green Climate Fund was formed, no Nigerian entity has been accredited because it's a long process. It's a difficult process. It's a tedious process. To go through it is tough. Now, the countries, most of the institutions that were accredited are the likes of AFC. At the regional level, you have the AFC, you have the African Development Bank, the FDB, right? But the problem with those institutions doing projects in Nigeria is that they are supposed to be a regional institution. So they'll probably come and do 1 or 2 projects in Nigeria and then go. And then go to Mozambique and then go to, South Africa. So you would not necessarily have a focus really to mainstream capital in Nigeria that you actually need to actually create a large impact. So we started this journey 3 years ago to be the first direct access entity, Nigerian-owned entity, that will be accredited to this fund so that we can be the conduit to get that money. All right? Yeah. 3 years ago. So we started this journey, and it was tedious. It was, I can't begin to tell you how much work we did, but we did it. And we defended it. And just last week, we were announced, it was the B39, the board 39, board meetings 39 of the Green Climate Fund in Korea, where Development Bank of Nigeria became the first direct access entity in Nigeria. Yeah. It's a great achievement, not just for us, but for Nigeria. Now, Nigeria can have pipeline of transactions. And we can do transactions up to $250 million. If you do that in the current exchange rate, it's about 375 billion. And you can do that multiple of times, right? Multiple of times. And you have that quantum of funds with that great level of concessionality, as you would say, then you can actually do good work. Then you can actually see the impact, and you can actually mainstream green financing, right? Because the capital is very important. Now, again, operationalization becomes very important. So we're working with the NCCC. NCCC is like your regulator in the environmental space, right? So they are the ones who are holding the fort for Nigeria in terms of what we've promised to the NDC. We have to work with the NCCC to come up with a framework which we're designing now to say, how do we ensure that we can get people who truly have projects that can change and transform Nigeria and can be sustainable and affect the environment in the way that, you know, we can create a more resilience within our environment. And how do we identify those projects? How do we package those projects? How do we structure it in a way that it will pass? Because every time you take a funding proposal, it goes to South Korea, and you have to defend it. And when you defend it, hopefully you get approval, then the money comes. So it's a very serious, difficult process. But we're happy because now the doors are opened and the windows are opened. The floodgates are open. But now it's our job to ensure we come up with a structure that works, and then our proposals are very solid, and then we can send it out to access this funding that can help do a good job and scale up a lot of the work that you're doing. So that's what has put, again, DBN on the map, because one of the reasons why we ventured into that was because we wanted to be, as much as we're a wholesale DFI, we also want to be the #1 green DFI in the country. And there was no way to be the green DFI if your strategy doesn't require you getting access to such fund, because the source of capital is very important. And that's what we've done. And the next thing we want to do now is to say, how then do we begin to structure the conversations and transactions? So I see there are already questions there, so let's take some questions. Yeah. Where's the mic, please? Yes, the lady. Yes, let's just go. The mic, please. Okay. Yes.
Okay, good afternoon, everyone.
Good afternoon.
Yeah, once again, congratulations
Thank you.
on the feat. So, good initiative, but we all know that the informal sector contributes more than the formal sector in Nigeria.
Yeah.
And one of the problems that we've had as a people is coordinating the informal sector to achieve all these SDGs. Because there's no entry point for data collation. So I'll bring it down to corporate governance. We have a corporate governance, code of corporate governance, the NCCG, mostly for publicly listed companies. Now, if our informal sector contributes more to the economy, it means you have potentials in the informal sector to achieve the SDGs.
Absolutely.
More than the private sector. In your conversations, what has been done to simplify corporate governance for MSMEs? Now, I've seen that there's a draft policy. How fast is the government going to roll out this policy for startups, for SMEs, to make corporate governance easier for them? The publicly listed entities struggle with corporate governance. It's not easy because it requires a lot of things. So you imagine a company that has barely 40 employees. You're telling them to have risk committee, statutory audit committee, these committees, that committees. Now, reducing this requirement for corporate governance is almost a requirement if we need to bring to onboard these informal sector players to the table. You can't practice ESG if you don't even know the nitty-gritty of corporate governance. So I would like to know in your conversations, in your wider conversations, how this is being considered and what plans we have to upscale governance in this informal sector. Thank you.
Great, thank you very much. I'll take 2 more questions and then we'll respond to that. Yes.
Good evening all. I'm Salis Yusuf, Marine and Blue Economy. So I think the first speaker made mention of participating financial institutions.
Yeah.
I don't know, in your own engagement with the financial institutions, is there any window or is there any engagement as regards the people that are operating in the marine ecosystem? Because if you look at the huge potential in that sector, and we have a quite number of small-scale fishermen and a lot of, let me say, deterioration of the environment. If you look at the marine community around Lagos and other coastal states.
Yeah.
So is there any window, is there any level of engagement with all these participating financial institutions?
Thank you.
Thank you.
Thank you very much. Last question for this round, and then we'll address it. No, we'll come back again, don't worry. Yes, excuse me. Yes, the man there.
I would start by congratulating you one more time. I think you guys are doing a fantastic work. Open access to African and Africans to obviously engage in getting funding. But my question to you is, I know you're doing a lot of work in that field. Have you been able to secure funding for a green company, and how much is that investment worth? And from your own sort of opinion, what industries would you be recommending to apply for such grants or financial instruments to help them expand, not just within Nigeria but Africa as a whole?
Sorry, the last part of the question. Repeat that again.
What financial instruments would you recommend for people that are looking to expand within Africa, in Nigeria and Africa as a whole?
Okay. All right. So let's take these 3 questions very quickly. So there's Lolade, you come. The first question was around corporate governance. How do we upscale and mainstream that within the MSME space, given how important they are to the economy? What are we doing? And you mentioned the bill and how we're contributing to that, to pushing that bill out. So there are 2 things we'll talk about. One is the capacity building programs that we run as a bank. So we have 3 mandates. There's the on-lending, there's the guarantee, and there is the capacity building. We are the only institution that has put together a head strategy. So forgive me if I'm overselling it. But I would like to I would boldly claim that as an institution, we've put together what we believe is a winning strategy for really setting ourselves apart in this space, in the development space. Because we're not just giving you money, because we know that money is not enough, right? There are a lot of people who can have money, but are not thriving, right? So there are other things. So we've weaved together a mandate that we believe as we continue to to drive and mainstream it, we will change and shape development in Nigeria. So one is lending. So the money is important, so we would on-lend. The second bit of it is capacity building. Because we know that the guy who needs money needs to know how to handle that money. The structures that are required must be in place. The governance that you mentioned, and I tell you, one of the things that sold us in this accreditation was our corporate governance. They looked at the board, they looked at the management, they looked at the team, they looked at the entire system in the institution, they looked at your processes, they looked at your policies, they looked at your frameworks, even policies that we didn't have, we had to develop. So they looked at this entire thing because those processes, policies, structures give them a sense of comfort that you know what you're doing and that you understand what you're doing, right? And that you have the right controls that are necessary to thrive. Now, these are important. And when you're unlocking capital and you're playing the space where you're going to the world to tell them, hey, don't give me money because I'm black, or don't give me money because I'm begging, give me money because I know how to use it. The next question you're looking at is, okay, so if you know how to use it, what's the structure? How are you going to use it? What policies and processes you have in place? So we have to demonstrate that, and that requires capacity. So we know that at the MSME space, you go to a bank and say, give me money. They won't ask you, who's your father's name? Some may, but largely they won't ask you who's your father. They said, why should I give you money? So you have to demonstrate that you have the skills and competence, you have the frameworks, the teams, everything. That speaks to that capacity. So we know that, and so we have a program that we run consistently year on year to help develop fund-ready MSMEs. So a lot of what we do is things around the corporate governance, your structure, your team, understanding the market, understanding how to do a plan and forecasting and modeling. All these things are important because when you're speaking to a banker, these are the things he wants to hear. Then we go to the supply side, which is the banks in themselves. And I'm surprised nobody has asked me why we work with banks, but I can answer the question before you ask the question. Is that it's important. There is no the funding. We did a study 2 years ago. The funding gap, to close the funding gap in the MSME space, is 11.4 trillion. My entire balance sheet is less than 1 trillion. The balance sheet of BOI is about 2 trillion, if I'm not mistaken. The entire development finance institution, less than 5 trillion. I have a funding gap of 11.6 trillion that is going up every year. There is no time we in the development space, we have enough money to close that funding gap because more MSMEs are coming, more needs are coming, right? So the wisdom is that if I can close that, the only way to close that funding gap is if development finance begin to play a catalytic role to get even commercial capital to understand the space and start pushing their monies in there. We did a study. In the study, we realized that there was 1 year that the entire money in the banking industry that went to treasury bills, lazy banking, treasury bills, 10 trillion. 10 trillion. So if money is sitting down there just doing nothing, just making money, if you can move that to the real sector, then you are getting closer to closing the funding gap. So the job is not just saying I'm providing capital. The job is saying how do I also ensure that those people who are also providing the same capital understand that space and can bring their monies in there. So if we collaborate, concerted efforts, just maybe we'll close the funding gap in your space. But to do that, you must understand the needs and the reason why those commercial capital are not going to the MSME space. So therefore, we knew that a lot of what we needed to do was to de-risk the space, right? So that is why the second mandate of risk sharing is important. So we tell the banks, okay, if you don't want our money, we want you to lend there. But we can negotiate and say, we will take 60% up to 60% of the risk if it goes bad. There's somebody saying, okay, now you're speaking to me. Okay, I want to hear that. So you've de-risked the space for them to use their own capital, balance sheet, to go into the space. And that alone, we've done about 120 in guarantees, for example, just promising the banks that if it goes bad, just promising, right? And they have unlocked capital of over 200 billion because of a guarantee of 120 billion. So you're already unlocking capital, you're catalyzing financing. That's very critical. The third thing we do is on the technical assistant, capacity building technical assistant. So I've just talked about the SMEs, but we also go to the banks and we tell the banks there are new models of lending to MSMEs. You're using collateral-based lending. As long as you continue to use collateral-based lending, you will drive penetration with retail banking because if I go there and the bank will give me money, you know I have a salary, right? All the banks will ask me to do is bring your salary and put to the bank. That's collateral as far as it's concerned. The bank will give a Dangote and all the commercial corporate guys money because they have assets. But a man who just woke up and say he has a dream and he wants to do tailoring, You say, what's your asset? Or the guy wakes up and says, I just want to, create something crazy. You say, they ask you for collateral. I don't have any. So what do you do in that kind of situation? You then say there are new models to bank those kind of people, because that's where your young people are. That's where the creative guys are. That's where the youths are. You then say that there are new models, cash flow lending, for example. How do you build on that? So we spent a lot of money training the banks, new models of lending. As we speak, we have 6-7 banks today who are doing cash flow lending, right? Going away from collateral, using cash flow to augment. And it's working. But I keep saying development finance is not a sprint, it's a marathon. So you have to be at it for a long time to see the impact. So we have weaved these 3 things into the model, and that's what we're using together: risk sharing, on lending, capacity building, technical assistance, and together that's what we're using to shape and change development finance. And so far it's working. But like I said, it's a long-term journey, and this is what we do. So on the capacity building side, we're doing that. The Office of Chief Economist in the bank also do policy advocacy. So a lot of the things we want to do is also advocate for such policies to come in place, because it's also necessary. There are other ecosystem things that must happen. So we're doing those policy advocacy. As we speak, we've already started the work of doing a policy landscape to understand what are the policies in the country today that speaks to even green financing and MSMEs, and how can we also put our weight around to advocate for it. So we're working on that. The second question is around marine ecosystem. I think the PFIs is a new area when you talk about the blue economy. One of the things we're trying to do in our capacity building, technical assistance, and also engagement with the banks is to say, can you tag your portfolio adequately? Some of them are actually banking in that space, but they don't really tag it adequately. So the data itself is lost in between, right? So we're trying to also ensure that the banks can tag their portfolio well, so we know what green is, and we know what portion of what area or asset class they are playing in. But obviously the market is big, the maritime space is big, so we're doing a lot more with that, and with time we'll be able to come up with those kind of portfolios that clearly speaks to those different aspects that that concerns when we look at the blue economy. The last question here is around securing funding for green company and the instrument. So the instruments we have today is lending for green, because like my colleague said, we have a green credit line that we have with KFW. We now have the GCF line. We also have the guarantees. Another instrument is also guarantees. So we're doing a bundling where we're also using guarantees as well as lending to unlock financing in that space. So that's important. Other important instrument will be grants and equity, right? For grant, in the GCF, we're not accredited yet for grant of equity, but we're going to go back for that upgrade. But that's already a good instrument as well, because sometimes when you're starting up, maybe it's not debt that you need, maybe it's equity that you need, or maybe you need a very, very concessional long-term patient capital debt. So you need to understand the kind of instrument you need at the very phase of your business. But I think all those instruments are important, but right now, in terms of instruments, it's guarantees, it's lending, and it's project management on our own bit as well that we have. But I think we're working on grants, which will come further down the line. We're doing it at a small scale with respect to capacity building, but I think at a larger scale, we're going to get the GCF to support us as well. Okay? All right. Any other question? Yes? Yes. I think we're going to, how long do we have? Yeah, so we're going to, let's take this question, and one more question. One. Yes. Oh, yes. So, Lolade, I think you'll tell us what that is. Yeah.
Thank you very much. I'm not going to waste time with my question. My name is Goodness Wate. I'm the Impact and Investment Relations Officer at SageGrey Finance Limited. We are currently in conversations with DBN for some on-lending facilities. She
says the business development manager says yes. Okay, great.
Yes. So my question is actually around in terms of reporting, because we as PFIs, I think at the Green Finance Conference held earlier this year, some of these questions were brought up, but as part of the criteria for DBN to accredit you as a PFI, you have to have a reporting framework. And I think even with the accreditation with GCF, the reporting framework for PFIs as per the loan portfolio you have is going to be a little bit more stringent, I think. So if you could throw more light on what the reporting criteria or the reporting framework is going to look like currently, that would help. Thank you very much.
All right. Marissa, do you understand the question? Yeah. Okay. Let's take So just note that. 1, 2, and 3. Yes.
Good afternoon, everybody. Let me say a big congratulations to DBN and what you guys are doing. One thing I like about you guys is that you guys are passionate about what you are doing, and that is why DBN is one of the, in fact, one of the foremost development back in Nigeria today. You guys just
we'll
started.
take it. Thank you.
Yeah. So when I came in this morning, the first time I visited was DBN. I remember telling Joyful that I know you guys very well, and now I can say my joy is full. Yeah, right. So, so that's going forward. My question is, I also told that I follow you guys religiously. That when this green bond financing that you guys just signed, that I saw it, right? So that's why I actually stayed behind. I didn't want to go to the other breakout session. So now my question is, how do you measure progress concerning some of the DFI, Deposit Finance Organization, that you guys work with? Because we play in the agric sector, right? So we also actually want to do go into mobility, because now the reason why food is expensive is because there's no subsidy, right? So if we can key to green mobility, that one will help sort of. So most of the DFI, you go to them and say, because I know there is moratorium, right? Few of them that have engaged with, they will tell you there's no moratorium. So my question is, how do you measure, right, and also monitor what this DFI do? Thank you.
PFI, sir. Thank you. Great. Yes, just two. Yeah, the young man here and.
All right. Thank you very much. My name is Abubakar Adam Musa. I work with the United Nations Refugee Agency. One of the major causes of climate change worldwide, or rather one of the major causes of displacement and migration worldwide, is climate change, right? And then addressing this actually requires a marriage of multiple stakeholders.
Yeah.
As a development financial institutions, I wanted to ask, is there a window, whether through blended financing, right, directing, or any way that could reduce or minimize the impact of climate change through providing sustainable solutions for these forcibly displaced persons through sources of livelihood? Is there such an opportunity, either through PPP with the state governments, right, a private sector, and the United Nations? Is there such a window? And then if yes, how could that be explored further? Thank you.
Thank you. Last question for this.
Good evening. My name is Kachi Adudu, Business Development Manager for Max Electric. Yeah. I'd like to ask, does your project management activities also cover doing anything regarding carbon credit market in Nigeria? Okay. That's the question.
Yes, thank you very much. So let's, Marista, let me ask my colleagues so I don't be the only one blabbing. Yes, and then Lolade, you speak up to the M&E conversation, and I'll speak on the carbon credit. Yeah.
Okay, so.
Yes, the people. So he asked about reporting framework for PFI.
Yeah, so I think the Sage Gate guy, yes, I think he spoke first about the stringent conditions of becoming a PFI. And you know, when he was saying stringent, I was laughing, because I know what the GCF took from us, but not to say that that's why it is that way. One of the things I said earlier when I was speaking, and I made sure to emphasize that, was the fact that we are wholesale and that we are licensed. You know, if you take away license, if you take away rules, what will happen? We'll do anyhow. So just to say, I'm saying this to say that some of those things that we have presented is actually from regulation. And thank God it's a public document, is publicly available in terms of the framework for regulating wholesale DFIs in Nigeria. It is authored by the Central Bank of Nigeria. It's not a DBN document. So if your regulator says that the minimum criteria for those you should partner is, for example, those who are regulated by me, then we can't work outside the scope of that regulatory framework. So that's generally being said. We are wholesale, meaning that if I don't have you, I can't really move or go far. You're essentially the vehicle through which I make all of this impact, nice impact story that I'm telling. You know, when the Max team was speaking in my head, I was calculating. I was like, oh, are these the guys that Sterling Bank is talking to us about? You know, so I'm just saying. So imagine that. I mean, I like your business proposal, and I don't have Sterling Bank in this case. Then I can only go so far. So whatever I need to be telling Sterling Bank to ensure that they are reaching you, I need to, you know, make sure that the deal is sweet, essentially. So that's why I'm explaining the need for the wholesale model. And I'm saying this again to say that we need you. Because we need you, we recognize, especially for the people, and I mentioned commercial banks, a lot of the commercial banks have the clout. I mean, we're here today courtesy of, you know, Sterling Foundation, Sterling Bank, and all that. They have, you know, access, international markets, all of these names we are dropping, these DFIs and all of that. They are in direct talks with them. Some of the lower end, and I don't mean lower in terms of status, I just mean in terms of, you know, how classification of financial institutions. Some of those guys may not have such access, you know, and essentially it's important that we reach all of them, because what's maybe a commercial bank may have in terms of volume, size, muscle, the microfinance bank will have the bottom of the pyramid guys. You know, they would have maybe the numbers within a community. So just to say that every cadre is very important. And because I have a wholesale license and I want to make sure that my impact, my reach, my numbers are, you know, when I call it, is staggering, I have to find a way to work with them. So what that means is that, like Jeremy, borrowing from what Jeremy was describing earlier, technical assistance is something that is ongoing. We have in the past done, you know, like 15 months, 10 months technical assistance, whereby we just meet some of these people we are partnering with to say, we want to, we've assessed you, it's diagnostics. It's not like we have some tailor-made thing we are coming to plaster on you to say, we want to help you build capacity to get to this point. Some of the institutions, when we met them, they didn't even know what ENS was. I mean, to be honest, if I start a microfinance bank in one community somewhere, that's not the first thing I'm really thinking about, you know. But we helped some of them to the point of, you know, helping them develop policies, operationalizing, sending some of them to some people to Kenya, depending on where they need to go to get best practices at our own cost. Because it's important that I have the vehicle that is going to move me around. So just to say that I do know that it is stringent, but the beautiful thing about it is that when you scale that hurdle and you become a partner to DBN, you automatically can be a partner to many people. I always tell my partners, some of the multilateral DFIs, that when they come, they say they want to see my partners. And when they see them, sometimes they close the door and leave me outside. But that's on a lighter note. So that's just to say that a lot of those things are regulatory, but because we know that some of them can be hard for certain caliber of FIs, we try to do other extra things to work with them. The second one is on how do we measure. Okay. Okay, sorry. I thought I was going to answer his question. I think it's this question they wanted me to answer. Okay, so about how we partner with state government agencies. So we actually have a whole unit for product development and strategic alliances. Joy is a member of that team, and strategic alliances. And what we do, because we're a wholesale DFI, essentially when we want to do something, we address it by way of a framework or a total proposition that would encompass. So it won't be maybe Lagos State DBN, you know, it might be like a state government framework or something of that nature that people can plug and play into. So we have something, we have started those kind of engagements. We've tried to pilot with a few states in terms of having that engagement. To get to a point of, from the initial discussions, we've gone back to our board to get the initial, obviously you have to get the approvals to do that. And we're looking to, the next phase essentially is to see if we can sign some MOUs And then obviously we can't go into all the 36 states, but maybe as we pilot, then we take the learnings and we replicate. To be honest, there's a lot happening. And Jeremy, did you tell them how old we are? We are all only but 7, so there's actually a lot happening. But again, we are here just to say that even if we don't answer all your questions, we're here tomorrow. We have a stand somewhere. Some of you came by earlier, and we are there. I mean, there were more colleagues earlier. We're actually a lot of us here. Our ED was here earlier in the morning, and we are here to answer questions because we're very interested in growing, in partnering, and in scaling. So I'm happy to discuss with you, sir, even afterwards. If there's anything we can learn and we can quickly start having the conversations, that's excellent.
Thank you very much. Very quickly, the M&E question.
Okay, thank you. So, great question. For monitoring and evaluation, we operate under the banner of a theory of change. So essentially, we have said to ourselves that, look, if you have certain inputs going into a certain location over a consistent period of time, these are the outputs that you would expect. So very scientific. And there's a long list actually of indicators that we have identified across a number of different areas as a bank that are important to us and that we want to monitor. So the first point of call is exactly what you've mentioned. From the PFIs, we get lists regularly telling us who they have lent to, what sectors they have lent to, how much has gone out, right? So that's coming in, that data is coming to us on a rolling basis every month, right? Now, what we tend to do is once a year, we have a massive monitoring and evaluation exercise where we are doing everything from surveys, one-on-one interviews, as well as physical visits with both the banks and the end borrowers. So for instance, we'll rock up to a mom and pop shop, a supermarket that has received DBN funding, and we're asking the customer questions about the entire experience, the ease of accessing the loan, what the loan has gone to, how it has affected their business. We take all that. Obviously, we're not doing it because we're lending to the whole of Nigeria, so it's not thousands of people we're talking to. It's a handful, a good sample size. And then we have an impact report that's produced on an annual basis. So if you go onto the DBN website, you instantly have access to that. And we've got some fantastic stories over the years where we have seen that through DBN funding, MSMEs have been enabled to not just stay alive, but actually scale. So I hope that gives you an idea of how we do what we do. Once again, if you go onto our website and you look at our integrated report, which is our annual report, we tell those impact stories. You can look at you can see the indicators, you can walk through our theory of change, and it just gives you a clearer idea of how we do what we do, but most importantly, the impact. Is that good? Good.
The final question is on the carbon market conversation. This is a very, for me, I think is one of the most recent innovation in Nigeria. I know it's out there, but I think in Nigeria it's very important because what it can do is really commercialize green financing. If the banks know that if I fund this thing, depending on the structure, I can get carbon credits, I can own the carbon credits, I can go to a market and I can convert that to cash, then already is an incentive, right? But the problem you have is that because we don't have a framework right now to regulate that, to guideline around our carbon market, what's happening is that even those who are generating credits today is being priced almost at nothing. So it's like saying you want to export a product and it doesn't have the stamp of it doesn't have a NAFDAC number, a SON stamp or any of those. You find that the international market won't regard it because it's assumed that you haven't met the regulatory standard in your market. So that's why somebody will generate carbon credits in another market and it'll be priced more than you in Nigeria, right? And we have real stuff we're doing. So I know that the federal government with the president have set up this committee to create a regulation for it, a guideline for it, that will ensure that whatever is coming out as carbon credit is verified, is validated, and in the international market you can be priced as it should in any other places. And that in itself will commercialize that market. So even when you're talking to other banks and people say, look, you can fund this thing and the carbon, depending on your structure, if you own it, then great for you. You can turn it to cash. Then it becomes an incentive for people to put in their money there. So that is part of what we're doing, is advocate for that regulation, advocate for that guideline. So we're doing that as well, working with the NCCC and the intergovernmental agencies that have been set up to drive this. We're hoping that that regulation will come up very soon, and that we can start really testing the market. But we're looking forward to that, because that's something else that we think will change the conversation, or help the conversation, push it forward, perhaps to the promised land, right? With these few points of ours, we believe we've been able to convince and not confuse you. But thank you for your time. We're still here for tomorrow, and we can always engage at our stand. But thank you. Thank you for being a good sport. All right. Take care. Tomorrow, can you talk about the panel session we have?
Yeah. So tomorrow, DBN is on the green financing panel. I think Godfrey is in the room. So I think it's about noon, hopefully, if the agenda goes accordingly. But we're going to, alongside other, industry stakeholders, talking about green financing options, but not just talking. My hope as a panelist is that we're able to actually talk through how to access. So we understand the gaps. You guys are the players in the room with all the tools. How do we get access to the funding? So hopefully you join us. I have been told it's supposed to be a noon conversation, but hopefully, yeah, they're on time. But yes, so. Bank of Agriculture, we don't have an ongoing partnership right now. We don't tend to work in that way, to be honest. However, from a policy/advocacy point of view, there are many times that we have met, and we are very open to discussions generally, but we don't do projects together or anything like that. No. Yeah. Sorry?
I understand that the Africa Energy won the bid to station their bank in Nigeria. Are you affiliated with them, or do you?
No, we're not. No, we don't know anything about Africa Energy Bank. No. Yeah. Oh, okay. Wow. Oh. I mean, we're trying to shut the room down, but so Godfrey.
Yeah, thank you very much. Mine is just a quick one. I wanted you guys to educate us more on your training in entrepreneurship, because I know you are doing fantastically well in that space. Thank you.
Yeah, okay, so maybe I just quickly run them through our capacity building program. So as Jeremy and Mariesta alluded to, capacity building is our second major mandate as a bank. We take it very seriously, and we look at it through two lenses. One, training the bankers themselves, right? And we all know why this is important. Traditionally, bankers were very averse to banking MSMEs. It was just seen as a high-risk area. So there was a lot of unlearning and learning that had to happen. And DBN, threw its hat in the ring and said, look, we're going to provide support in that area. And we call this our technical assistance program. So we've done a lot of fantastic things in this area over the years. So areas that we have trained traditionally include E&S risk management, right? So helping them set up desks, helping them build the skills in-house so they're able to do the scanning in terms of risk under E&S properly. We also provided a lot of training in terms of, in fact, we have a community, what we call a community of practice for sustainability. And so we train them on sustainability areas every year, especially the microfinance banks. We've also provided training on gender related areas, also because, as we know, these banks increasingly have gender desks, but we know that there have been lags in terms of how they were servicing that particular sector. So that's for the banks. Now for the MSMEs as well, traditionally DBN wasn't even supposed to focus on training MSMEs because we were just supposed to be very linear with the banks. But we knew that we could not operate in Nigeria and totally ignore that, the training of the MSMEs. So we decided to go directly. And we do this through what we call our biggest bank program, right? So we have a lot of minor training sessions that we hold throughout the year, but we have one flagship one. And what we do over the course of, I think it's about 2 months, we start online. And this actually, also very important, we've got an online training portal called the BizAid, B-I-Z-A-I-D, BizAid platform. If you go onto the DBN website, once again, www.devbankng.com, you look for the BizAid tab, you will instantly be on our e-learning platform. And we have free courses in every single conceivable area. Free. You can just go ahead and take it. So we're always trying to talk about this because we realize not enough people know that it exists. But anyway, in our annual programs, what we do is the entrepreneurs apply online. There's usually a call for applications. It's public, it's in the newspapers. Once that closes out, we then take the entrepreneurs through our online courses. Now, there's certain criteria. So as an MSME, if you finish a certain amount of courses within a certain amount of time and you get a certain score, you are then shortlisted into in-person programs. Now, the in-person programs traditionally ran only in Lagos and Abuja. Recently, we expanded into Port Harcourt, and this year, to 2024, the program is going across the southeast, the southwest, the northeast, and northwest. So we've gone boom, and those are in-country or in-person teaching sessions. They usually run over the course of 1 week. I'm not a trainer. I won't be training. We work with consultants. Traditionally, we work with consultants like EDC, which is the training arm of the Lagos Business School. And then out of Abuja, we work with a company called Wider Perspectives, and out of Port Harcourt as well. So we work with consultants. So one of the things we're always on the lookout for are consulting firms who are able to provide that service and partner with us on this flagship program. Now, after the training culminates at the end of the 1 week timeline, we then have pitching sessions, and that's where I show up. And some of us, you'll see our faces, because we judge. So we enable the entrepreneurs who have gone through the program pitch. Yes, some of them already have existing businesses, but this is an opportunity to have that oomph in your business. And so you can win a certain amount of money that sort of just enables you to operationalize everything you've learned in the past few months with DBN. It's a program we're extremely proud of. To date, we've done well, but we have a very, very aggressive strategy for the next 5 years, and we're trying to get to over 500,000 entrepreneurs. And we're doing a lot of exciting thinking around how we can get Nigerian entrepreneurs there. So I would definitely advise that you please always check the DBN website for updates. Follow us on Twitter and any other social media that works for you, LinkedIn, because we're constantly putting things out there. The new strategy that we have for entrepreneurial training really is a massive, hold all strategy. And you want to be a part of that if that is of interest to you. So thank you very much. And thank you all for staying. We were actually worried, but we hope this has been good for you too. Thank you.